Hey you guys, so today I want to talk to you about, can you still buy a home in 2026 with high interest rates and less than perfect credit? That by far is one of the biggest questions buyers are asking right now. A lot of people are nervous about rates, worried about their credit score, and wondering if they should wait before buying a home. But here's the reality. Today's rates are actually not the highest rates we've ever seen. Back in the early 1980s, mortgage rates was actually around 13 to 15% and even reached close to 18% at one point. And guess what? People were still buying homes. The difference today is buyers have more loan options, there's more down payment assistance programs, and we have the ability to refinance later if rates improve. So in today's video, I'm going to break down whether you can still buy with lower credit, why waiting may actually cost more long term, what's happening in the Myrtle Beach and Conway market, and what buyers should really be focusing on right now. Hi everyone, I'm Lisa with Homes and Loans with Lisa, helping clients from dreams to closing throughout South Carolina and North Carolina. Let's jump into it. So first, let's talk about interest rates and why so many buyers are nervous right now. Yes, the interest rates have gone up. We've seen them go down a little bit, but we have not seen them go back to the 3.99% that we all got accustomed to. And while I would like to see the rates go back to 3.99%, the reality of what is happening in today's market is the rate is up. I've seen rates ranging from 6 to 8% depending on what type of loan you're doing, and even higher in some cases. So the rates are definitely different from where they were at, but I think more so people are more focused on the rates than they are focused on whether they can afford the payment, because the rates we have no control over. There's been a lot of predictions. Some say it's going to go up, some say it's going to go down, but in reality we really don't know what's going to happen with the rates. I tell my clients all the time, I wish I had a crystal ball so that I can look at it and say, hey, this time next year this is what's going to be happening. But no one knows. We have to focus on the reality of things, and then we also have to look at where we're most comfortable at. If the rate is 6% or 7%, but yet your monthly payment is going to be affordable, then let's put our focus on where your monthly payments are going to be and see if that's a good number for you. And then that way it's a win-win situation. Honestly, you may find a house today that checks off all the boxes. And you may be that person that says, you know what, I'm going to wait until the interest rates go down. Well, what happens next year when you're not able to find a house that checks up all the boxes and you're not satisfied with what's on the market then? So I always tell my clients, look, the best thing you can do is date the rate, marry the house. What does that mean? That means I found the perfect house, so why would I not jump on this house? Even though the interest rates may not be as favorable as I would like to see them. But the good thing about the interest rates, and the part that I think a lot of people miss, is you can always refinance the interest rates at a lower time. The main thing is making sure you're able to afford that payment and is not putting you in a compromising position. And when I say that, I mean the monthly payments are still within your means, they're still within your budget, and they still provide a comfortable lifestyle. Now, if those things don't line up and you're not going to be comfortable, then by all means, now is not the time for you to buy a house. And I'm very straightforward with my clients, and I let them know based off of the information that they tell me whether this is a good time for them or not. So that's one that I hear a lot of concern about. The other thing that I wanted to talk about is the different loan options. I won't go into all of them. Feel free to message me or call me if you have any questions about them. But I will say that, like I earlier, we have down payment assistance programs now. So we have those programs that are able to help you when you're not able to afford a down payment. We have USDA that as long as you qualify and live in a certain area, you don't have to put anything down. We have FHA where you can put 3.5% down and still walk away with a home. A lot of times what I hear people say is, I was told that I had to have 20% down. So I want to bust that myth right now. You do not have to have 20% down to get a home. Do you need to have money saved up? Yes. Even with a USDA loan type or down payment assistance, there's still going to be out-of-pocket expenses that you have to show that you can cover, such as the appraisal, such as your earnest money deposit, such as your termite inspections. You do still, regardless of what program you get, whether you get seller's closing costs or you get one of the loan options that I mentioned, you still need to make sure that you're still saving away for those out-of-pocket expenses. So I think those go hand in hand with the rates and also talking about the down payment. Another thing that I feel like buyers are really concerned with is their credit score. I had a client come into my office for a consultation, and she thought her credit score had to be 750, and she was at 720 and climbing. And she just kept saying, I'm going to wait till next year. I'm going to wait till next year to get a house. Well, why would you wait till next year if your credit score is 720? And sure enough, when we punched it, at about 730. So we were able to get her finance, get her in a home. Her monthly payments were going to be at a comfortable rate that she could afford, and she was satisfied. It was a win-win situation. And having a better credit score can sometimes save you money on the interest rate. I mean, we're talking about pennies on the dollar, depending on where you're at and where you're trying to get to. Me and my mortgage team are able to do down to a credit score of 580. Does that come with stricter rules and, different things that we have to factor in because of the credit score being so low? Yes, but we do it every day. So don't even let having a low credit score stop you from getting a home. Like I said, the good thing about it is that there are so many different options out there these days. Different loan types, different programs that can help you when you're trying to get a home. The next thing I feel like I run into a lot is the fear of rejection. So clients and buyers just fear the unknown. They don't know what's going to happen. They don't know. Some of them don't even know where their credit score is. Haven't checked it. Scared that they're going to look at it and it's going to be a 400. But what about being scared that you can look at it and it'll be an 800? I'm trying to say is you should be checking your credit periodically, whether that be on different apps out here that you can go to and monitor your credit score. But you should be monitoring your credit, because you never know when someone could be getting something under your name that you're not even aware of. You're fearful of checking your credit score and seeing if the information on your credit report even you. So that's an important step. But like I said, there are programs out there for buyers that have even lower credit scores, 580, 620, 6. So don't let that stop you from getting a home. The other thing that I constantly go back, because I hear this more than others, is buyers are waiting for whatever reason. A lot of the reasons that I get is that they're waiting for that interest rate that I discussed earlier. One thing I do want to bring up that I feel like is very relevant to what I'm talking about is when these interest rates, and if they do drop, what's going to happen? So I think a lot of people haven't factored in what a lower interest rate means. Sometimes it can mean that the prices of houses go up. So you're still in that same predicament because now, even though the interest rates is lower, the price of houses went up, which is still bringing your monthly payment up. But the biggest thing is the amount of competition you're going to have. So when the interest rates drop, so many people are waiting on that very factor that once those interest rates drop, people are going to jump to the market. They're going to jump to real estate altogether, and they're going to be buying up houses. The problem is that there's going to be people that's in better financial situations than other buyers. You're going to have cash buyers out there that don't have to worry about financing. They don't have to worry about whether it appraises for this particular amount. They're ready to lay that cash on that particular property that they want. And in some instances, they're even willing to get in a bidding war where they're bidding 30, 40 plus $1,000 more than their competition to get the home of their choice. So what did we find when we were going through the bidding war, when we were seeing a lot of bidding wars, is that a lot of buyers were still not able to buy the homes that they wanted because there was other buyers that were in better financial situations and they were buying the things that they really wanted. So that's just something I want to say, just keep that in mind. Again, I am big about making sure that you're comfortable with your monthly payments, making sure that you can afford that payment, and making sure that it doesn't put you in a bind. You still have to live. There's still other expenses to be paid. So just factor that in when you're looking at your monthly payment and where you're comfortable at. But also factor in these points that I brought up about, the other assistance programs, the other loan types, maybe not having perfect credit score, fear of rejection. And you do check your credit score. Check your credit report periodically. Make sure that there's not anything that's inaccurate on there. As a mortgage loan officer, I'm checking for charge-offs. I'm checking for collections. I'm checking for late payments. I'm checking for credit score. So a lot of times people think, well, as long as I have a 700 credit score, I'm good. But that's not necessarily the case. Because if you got a 700 credit score, but you also got 50 charge-offs, then I'm still going to have to tell you that I'm not able to assist you unless there's some type of extenuating circumstances that has caused you to have so many charge-offs and collections. So thank you guys for taking the time to look at this. Like I said, I wanted to go over a few buyers' concerns. Hopefully this motivates you and encourages you, but also educates you on today's market and some things to just be aware of and be on the lookout for. I'm in the Myrtle Beach and Conway area. I also do North Carolina, right across the borderline of Myrtle Beach, and I extend down to the PD area of Lawrence, Marion, and Mullins. If you are on the fence, not sure if you're ready to buy or not, and just need to talk it out with someone, or maybe you are ready to buy and you just need to see how to apply, feel free to send me a message. Please like, share, and comment this video and leave me a question below. I read all my questions and I'm happy to help any way I can.